Joining me right now is the former president and CEO of the Atlanta Federal Reserve, Dennis Lockhart. Dennis, it's great to have you this morning. Thanks very much for being here. What are your expectations for the jobs picture? We know the expectations are 650 overall. There are some economists that go as high as 1 million jobs. But I guess overall, what's your sense of where we are on jobs right now?
Well, let's hope it's 650 or higher. The indicators we've received this week, the ADP report of a couple of days ago and the claims report yesterday, were both very encouraging, I thought. So I think there's a decent chance that the April report was just an anomaly, and we're going to bounce back to a good pace of job accumulation. But we shall see about 25 minutes from now.
Well, what about growth overall, Dennis? I know that the Atlanta Federal Reserve is now expecting growth in the second quarter of 10.3%. That number has moved around a lot, clearly. What's your sense of the economic backdrop today in terms of growth?
Strong, very strong. You cited the tracking estimate of the Atlanta Fed. The New York Fed also has one. It's quite a bit lower. It's a little over 4%. But I think the overall point is that the economy is performing well, and the economy is recovering very strongly. And we're going to continue to see very high growth numbers, unprecedented high growth numbers in some respects.
Let me bring in Liz Peek here. Go ahead, Liz.
Good morning. If we have a blowout jobs report, let's say 1 million jobs are created, what does that do to the thinking of the Fed on the timing of winding up its QE, its bond buying program? Does it happen sooner because of a big jobs number, do you think?
Well, I've been following all the commentary of the Fed officials, and some are beginning to hint that they are ready to start thinking about. And they have a meeting coming up in a few days' time. It could be on the agenda for the June meeting, but I suspect it's a multi-meeting task in order to form a consensus and come up with a plan for tapering. So they may start next week, or they may wait till the July meeting.
Well, look, I mean, it's a good question because the central bank has already announced that it will sell off corporate bonds and some exchange-traded funds that it acquired last year, Dennis. I was surprised that this did not suggest that the tapering was about to begin. I mean, the Fed had purchased these assets through the emergency lending facility to contain the economic fallout of the pandemic, but bank officials are saying that the decision is unrelated to monetary policy. They made sure to say that so that people would not see this as the beginning of tapering. Do you think this is the beginning of tapering?
No, I don't think you can connect those two things. I think unwinding the emergency portfolios, which were in corporate bonds and ETFs, as you mentioned, is really unconnected to the question of tapering the QE purchases. So I just don't think those two things are connected. And I think they've made very clear that unwinding those portfolios is not part of the policy setting at the moment.
So what's the impact here of the unwind?
The markets apparently are functioning appropriately, so they will be careful not to disrupt markets in any way. So that's a question of how quickly they sell off their ETFs or their bond holdings, but it should become a non-event. I doubt that it's going to get any attention to speak of in a few days' time.
And Dennis, real quick, in terms of the most important parts of this jobs report, what are you going to be focused on when we get these numbers in about 20 minutes? Because, for example, one issue is wage inflation, and I'll be looking at how, the incremental increases that we've been seeing in wage inflation. Are we going to see wages go up significantly, and will that indicate an inflationary story even worse than we thought? Are there other things that you think are important we should focus on out of this report?
Well, I pay attention to participation. because what has happened, of course, over the COVID-19 pandemic months is people dropped out of the workforce. So it's a question of whether they are coming back into the workforce, and participation is rising. The unemployment rate itself is to some degree a function of underlying participation, and I don't think it tells you much unless you really look at the combination of participation and the unemployment rate. You mentioned wages. We see a lot of bottlenecks, if you will, in the labor market, where you have people out of work and at the same time employers saying they can't find qualified candidates. So one response to that is to raise wages. So we shall see whether or not that's happening. As its connection to inflation, I think it's a little too early to say, quite frankly, because this could be just simply an adjustment in a period of time in order to try to attract the workforce that a company needs.
Yeah, well, it makes sense because a lot of them are desperate to get workers on the job. Dennis, it's always a pleasure to get your insights. Thank you, sir.